Major financial institutions have teetered on the edge of collapse, and some have failed. As uncertainty has grown, many banks have restricted lending. Credit markets have frozen.
January issue? The bailout was far bigger than the Federal Reserve let the public or even members of Congress know at the time.
Welcome back to Rising Influence. I'm thrilled to have you join us as we delve deep into the crucial events shaping our world. Today, we're examining the influential force that is BlackRock and its visionary founder, Larry Fink, one of the most potent figures you've probably never heard of. Get ready to uncover how this financial powerhouse operates behind the scenes and why understanding its impact on the global economy is essential. Let's rewind to the pivotal year of 2008, the time of the financial meltdown. As major institutions like Bear Stearns, AIG, Fannie Mae, and Freddie Mac teetered on the brink of collapse, the government turned to a heavyweight financial firm, BlackRock, led by the incredibly well-connected billionaire Larry Fink. In a move that raised eyebrows, BlackRock was handed key government contracts without competitive bidding, entrusting them with the task of navigating the stormy waters of the crisis. The kicker? Larry Fink was effectively appointed as the architect of Washington's bailout strategy for Wall Street, all while BlackRock held significant stakes in the banks they were bailing out. This unique position marked Larry as a critically influential player in the post-bailout landscape. Now, fast forward to 2020. Enter the pandemic. In a remarkable turn, the Federal Reserve made history by stepping into the corporate bond market and buying corporate debt ETFs for the first time. This unprecedented move fueled a surge in the corporate debt market, with the Fed declaring its commitment to leveraging all tools necessary to bolster the economy and ensure a strong recovery. But who did the Fed enlist to oversee these groundbreaking bond purchases? You guessed it, BlackRock. Despite the complexities, it's worth noting that Larry Fink's influence has grown immensely, positioning him as a pivotal player in the post-pandemic economy. However, the remarkable thing is that despite wielding so much power, Larry remains largely unheard of by the general public. His company, BlackRock, only recently caught the spotlight amid discussions about purchasing single-family homes. This is partly by design. Larry has spent over 3 decades carefully cultivating BlackRock into the world's largest asset management firm, boasting more than $9 trillion in assets under management. Yes, trillion with a T. BlackRock's clientele is vast and varied, encompassing pension funds that manage retirement accounts for everyday people, sovereign wealth funds, central banks, college endowments, Fortune 500 companies, and millions of individual investors. They hold significant shares in many top publicly traded companies, including giants like Apple, Microsoft, and Facebook, as well as major banks like Wells Fargo and Chase. For perspective, the 300 most significant pension funds globally manage a collective $6 trillion, while Vanguard, a leading player in mutual funds and ETFs, trails behind BlackRock with just $7.1 trillion in assets. When we look at the big picture, the combined power of BlackRock, Vanguard, and State Street represents about $15 trillion in assets, roughly 70% of the US GDP. It's astounding, and much of this influence has been cultivated from behind the curtains, with Larry's relatively low public profile. He rarely gives interviews and only makes select appearances on platforms like CNBC. As William Cohen, a former investment banker and author of House of Cards, aptly summed up, Larry is akin to the Wizard of Oz, with his influence woven into the very fabric of our financial world. When Bloomberg asked Larry whether he's the most powerful man in finance, responsible for overseeing a staggering $9 trillion, Larry downplayed his position, stating, "I don't think of myself as powerful." This humble perspective from a man of such influence can make us feel more connected to him. So, is it true that BlackRock owns the world? The answer is nuanced and multifaceted. As we continue to explore these themes, thoughtful discussion is vital. The impact of powerful financial institutions like BlackRock shapes our economy and society on many levels, influencing everything from investment strategies to housing markets. So, let's keep the conversation going. Your thoughts and opinions matter, and understanding the unseen forces in our world today is more critical than ever. Your engagement in this ongoing dialogue is crucial. BlackRock has showcased some truly remarkable achievements. In 2010, it was recognized as the most influential financial institution in the world. By 2014, the firm had amassed an astounding $4 trillion under management, making it the most significant asset manager globally. For perspective, the Industrial and Commercial Bank of China had approximately $3 trillion then. Fast forward to today, and their assets have more than doubled to a staggering $9 trillion over just 7 years. It's incredible to see how BlackRock is involved in many facets of the financial landscape. They are major shareholders in some of the largest publicly traded companies around the globe, playing a key role in industries such as banking, energy, transportation, food, and finance. They held a 4.81% stake in Deutsche Bank. And here's a noteworthy accomplishment. In 2020, BlackRock received approval from the Chinese government to set up a mutual fund in China, making them the first foreign asset manager to receive this green light. The company's influence doesn't stop there. It has a significant presence across various European companies as well. Interestingly, BlackRock practices something called circular ownership, where it holds shares in companies that also own shares in BlackRock itself. While this may raise eyebrows, it certainly highlights its expansive reach. Due to its vast size and influence, coupled with its discrete operations, BlackRock is often referred to as the world's largest shadow bank. This leads us to ponder, what drives someone to create something on such a grand scale? Larry Fink, the co-founder, has often been described as someone who is continuously striving for more. Friends note his intense focus and determination to maintain control over the company he built. Larry's journey to success wasn't straight. It was paved with challenges and valuable lessons, including a significant loss of $100 million, which ultimately helped shape his future. He began his professional journey by majoring in political science at UCLA and then stepping into the fast-paced world of Wall Street at just 23. His political acumen later proved vital in positioning him as a pivotal intermediary between Washington, D.C. and the financial sector. After receiving offers from leading investment banks, he chose to work at First Boston, where he specialized in structuring and trading bonds, a fascinating area within finance. Larry quickly ascended the ranks, becoming somewhat of a legend in a decade by helping to develop the debt securitization market. This innovative approach allowed various loans, such as mortgages, car loans, and credit card debts, to be bundled, sliced into pieces, and sold to investors. Although this process ultimately contributed to the 2008 financial crisis, it was initially viewed as revolutionary and transformed how large banks and pension funds could invest in the housing market through mortgage-backed securities composed of thousands of potentially safe loans. Larry played a pivotal role in creating a tool that led to a crisis, and the U.S. Treasury also enlisted him to help address that crisis. His deep understanding of policy and strategy solidified his reputation as an investment genius. Thanks to his accomplishments, Larry received a multitude of accolades. At just 31 years old, he became the youngest managing director in First Boston's history and was often speculated to be in line to lead the firm one day. He contributed approximately $1 billion to First Boston throughout his time there, but the ride wasn't without turbulence. Following one of his significant victories, he faced a devastating loss of $100 million due to a misguided trade. This catastrophe turned his status from a celebrated hero to a colleague to avoid at all costs. Larry found himself ostracized, and his hard-earned reputation took a nosedive, leading to his departure from the firm he had dedicated 12 years to building. While many might have seen such a setback as the end of their career, Larry chose to view it as an opportunity to grow. Vowing never to be caught off guard again, he rebooted his career in 1988 at age 35 by co-founding the Blackstone Group alongside billionaire investor Stephen Schwarzman. They started with a modest $5 million line of credit. By 1993, they were thriving, managing an impressive $20 billion. However, what some might describe as a power struggle between Larry and Stephen, both strong personalities, led them to part ways, and Larry set off to establish BlackRock. He channeled the pain and lessons from his past failures into building a remarkable, globally recognized company. The story of Larry Fink and BlackRock is a testament to resilience, innovation, and ambition. It's inspiring to see how challenges can be transformed into drivers for success, leading to the creation of one of the most powerful financial institutions in the world. BlackRock has experienced incredible growth over the years. By 1999, the firm went public with an impressive valuation of $375 million. Fast forward to 2004, and their acquisition of Merrill Lynch added an astounding $500 billion to their assets. Today, BlackRock manages an extraordinary $9 trillion in assets. While the scale of BlackRock is noteworthy, the true differentiator lies in their cutting-edge software platform, Aladdin. Aladdin is akin to a supercomputer, powered by a network of 5,000 computers that monitors millions of trades and analyzes clients' portfolios around the clock. This sophisticated technology performs in-depth risk analysis, making Aladdin a vital component for numerous major players in the investment management industry. To provide this invaluable service, BlackRock must access sensitive data from banks, insurance companies, pension funds, and other influential institutions across the globe. This advanced computing power evaluates countless scenarios and identifies potential risks, empowering clients to make well-informed investment decisions. Through Aladdin, BlackRock doesn't just oversee the previously mentioned $9 trillion. It manages an impressive $21 trillion in assets, gleaned from just a third of Aladdin's total 240 clients. This effectively means that BlackRock monitors assets equivalent to at least 10% of all stocks and bonds worldwide. In 2018, the global financial landscape was rocked by a crisis reminiscent of the Great Depression. During this tumultuous time, Wall Street called upon BlackRock to step in and manage the government's bailout efforts. Notably, the New York Federal Reserve sought assistance from Larry Fink, BlackRock's CEO, to handle $30 billion in toxic assets from Bear Stearns. They also enlisted BlackRock's expertise to facilitate the distribution of $100 billion in toxic assets from AIG and to assist with managing $31 billion in Citigroup's assets. These transactions took place behind closed doors, with no competitive bidding, leading to Larry's significant rise in influence and power. From being the subject of industry jokes to acting as a crucial liaison between Wall Street and Washington, Larry has become a central figure in the financial world. As a former bank executive aptly noted, Larry has always aspired to be influential, and he's now reached a level of importance he previously only dreamed of, and he's embracing it wholeheartedly. The contracts generated at least $200 million in earnings, further elevating BlackRock's profile. The immense size and obscurity of these contracts and BlackRock's vast influence sparked conversations about their role in finance. Their operations began to be likened to a shadow government, echoing concerns that some associated with private military contractors during the conflict. While it's easy to perceive this scenario as questionable, it's essential to consider the context. When the government intervenes, it must turn to experts to navigate complex financial instruments, especially given its past accountability in the crisis through low interest rates. So why not consult with a seasoned professional like Larry? While the circumstances are indeed complicated, allocating significant contracts to someone with extensive expertise in the field is more understandable than it may appear. This dynamic continued in March 2020 as the COVID-19 pandemic hit the world hard. BlackRock again supported Wall Street and government recovery efforts. The Federal Reserve brought them on board to aid in bailing out corporations with overwhelming debt or those requiring funds to remain operational, including companies in which BlackRock had considerable stakes. While these scenarios raised concerns about potential conflicts of interest, BlackRock also assisted the Fed in purchasing additional mortgage-backed securities to ensure market stability. Looking ahead, one may wonder, what direction will BlackRock take next? With significant accomplishments already achieved, the firm has received public scrutiny in 2019 regarding its investments in high-pollution industries like oil and coal. Larry committed to environmental, social, and governance (ESG) principles to recognize the growing demand for responsible investing. Whether or not BlackRock genuinely believes in these values, they are making significant strides towards expanding into the eco-friendly investment market. Through genuine collaborations with activist investors, BlackRock has encouraged major corporations to prioritize sustainability, such as pushing ExxonMobil to intensify its climate change efforts. Larry boldly articulated a vision for companies, urging them to contribute positively to society to gain BlackRock's support. This dedicated focus on sustainable investing, better known as ESG investing, is a driving force behind the growing trend among corporations to demonstrate their commitment to environmental and social responsibility. Today, if you're interested in investing in a company, you'll likely encounter their ESG scores prominently displayed on investor relations pages. ESG stands for environmental, social, and governance, encapsulating a holistic view of a company's operations and their impact on society. BlackRock's journey is a fascinating blend of innovation, influence, and adaptation to the changing finance landscape. With its remarkable technology and strategic approach to sustainable investing, BlackRock is well positioned for a bright future in investment management. It's essential to keep the momentum going, and that's why initiatives like a Pride-themed ad from companies like Nike during Pride Month are so impactful. It's an excellent opportunity to show support by displaying flags and celebrating the LGBTQ+ community, which can also enhance a company's ESG score. Larry Fink's journey is a remarkable story of resilience. After facing the immense challenge of losing $100 million, he channeled that experience into transforming BlackRock into the powerhouse it is today. His commitment and drive are truly inspiring. Many acknowledge that he remains as passionate about his work as ever. When Larry speaks about what matters to him, he emphasizes the importance of being seen as a genuinely caring human being. He aims for authenticity and humility. He proudly shares that he has remained true to himself over the past 30 years, and that honesty is refreshing in today's world. There's much debate about whether figures like Larry represent a new form of American oligarchy. It raises an intriguing question. Are well-intentioned leaders working for the greater good, or is there more at play beneath the surface? Just how much influence does BlackRock wield in shaping the global economy? I'm interested in hearing your thoughts. What do you think about companies like BlackRock's role on the world stage? Thank you for joining me on this exploration of rising influence. If you found this video enlightening, please hit that like button, subscribe, and turn on notifications so you can catch all my future deep dives. I truly value your insights, so share them in the comments below. Let's keep the conversation going. Until next time, stay informed and keep cultivating that curiosity.